What if I told you that the world economy is going to hit its biggest financial conundrum since World War II? This was the question on May 23rd, 2022, in Davos, Switzerland, at the International Monetary Fund. Welcome to Finance Simple, where money is made easy. Let us take you through how this affects you and what you can do. Let us first begin with your assets and how the people around you affect your long term success. Another is the battle you will have against financial planners, as the charts they present only date back to 1981, where Paul Volcker increased rates. Sure, since that point there has been a downward cycle in interest rates, which gives the impression that the stock market will always go up, right? What happens when interest rates start going backward? Stock market charts dating back to 1927 to roughly 1980 or 1981 were visibly flat even after adjusting for inflation. But what if these data are the only ones they want you to see? It's even worse that the last crash around 2008 during the reversal of the repo market, where financial planners and real estate brokers are all aboard the rising market, interest rates kept decreasing while real estate, stock market, and the bond market are steadily skyrocketing. It sounds like a dream, doesn't it? Well, there's just one problem. The saying goes, the bull goes up the stairs, the bear goes out the window. And when people believe that it will never go down, I hate to break it to you, but it all will come crashing down sooner or later. Through the words of Jim Rogers, you just got to buy panic and sell hysteria, and in the stock market, you can easily figure out when hysteria is occurring. These where bull markets are problematic, as stupid people seem smart. Watch out for falling bankers. A saying in 1929, people were jumping out windows, taking with them innocent lives down below. This all seems a bit familiar nowadays with people committing suicide over the stock market. But who is to be held responsible for all this? None other than the Fed, as this all just a ploy to force people to the risk curve. So what can you do? Well, first surround yourself with smart people, carbon credits, biotech, and so much more. Opportunity is all up for grabs today, and hanging out with intelligent individuals will only help you know how to make the most out of these moments. We could only very well be going onto a long term cycle where prices of commodities like coal, uranium will all be highly influenced by investments. It has been said over the last 30 or 40 years, if everyone else is investing and you join the bandwagon, which is what school most probably encourages you to do, you will most likely lose money. But go against the current, where everybody disagrees with your investments, you'll see this potentially can give you the best money. The United States doesn't own oil companies, and they also do not own stocks. But what do they have? Oil wells. What happened when President Biden cut the XL pipeline? Oil went from $30 to $130. That's a big increase in money making. However, this has consequences, as countless lives are swept out. Inflation has been increasing food and fuel prices, and it doesn't serve everybody equally. This doesn't get any better, as any intervention in a free market economy will only worsen the situation of poor and middle classes. The unstoppable inflation, with its invisible tax or assets that wipe out aspiring people, or their malinvestment and misallocation of resources, it never gets better for them. As Jim Rogers said, a quick path to the poorhouse. Free market capitalism is certainly not flawless, but in raising living standards for the poor and middle classes, it's the best shot that we have. A lot of children go into college and have a mindset and think they're set for life, and that's where they learn about Marxism, which is to tax the rich and such. But Klaus Schwab mentioned, someday you'll own nothing, and you'll be happy, which is the eradication of private property, and what does it resemble? Marxism. And that's what kids are being taught in school. The presence of inflation gives us a chance to validate the reason of taxing the rich, but it's all a bit unreasonable because the solution to consumer price inflation is through producing more stuff. Think about it. If you tax the producers, will we run out of products in the future? No, they'll possibly just produce more stuff. Money continuously moves. We are attracted to where there's more money, but this is where inflation comes to bite us in the back. It influences people to shift to UBI, Universal Basic Income, as well as MMT, the modern monetary theory, which is what? Marxism. We are going through a global consumer price inflation rate at the moment, and this is an alarming problem, a global crisis since World War II. And what is their best solution? UBI. They say we can solve consumer price inflation by giving more people money and restricting supply of goods and services, impeding producers from actually producing. But no, this is all a big lie, as it's the complete opposite. Less money is needed, and more products are highly essential. If people are given more money, it will most likely be produced through the issuance of new debt, and it will then increase debt even more. Someone's going to have to pay for all that new money. A credit card generates debt as it generates money into existence by borrowing it, which was what first done in 71. You borrow money, then it will be created. This reminisces of the fractional reverse system, as it was best explained. You put your savings in a bank, $100, then the bank can lend $1,000 with a 10 to 1 leverage. This is where money is created out of nowhere, which reverses back to the central bank digital currency, with them trying to eradicate cash. This explains the trend of the skyrocketing fame of crypto among the youth. They are aware of the problem happening, they just refuse to understand it from a macro perspective. What then is CBDC? Central Bank Digital Currency. Simply defined, all the average individuals, including businesses and corporations, have an account with the central bank, which in the case of the United States is the Federal Reserve. But this all seems a bit familiar, as doesn't central bank revert to Marxism? 100% central planning, as now the banking system determines how much new money will be generated. While it is quite different from deficits, quantitative easing, and the like, it is usually the banking system where they keep the loan on their accounts while they own the loan. They will most likely want to lend it to someone who will surely pay them back. An ideal scenario would be to lend the money for productive purposes, which would imply that the money that's being created will be to generate more goods and services, which hinders inflation even if there is more supply and money, which is how the free market seems fair. It creates deflation, not inflation, as capitalism causes prices to go down, since otherwise you can't compete. This helps improve the living standards for poor and middle classes. However, with the schools teaching Marxism, it denies any promise of improvement, as once the United States transitions to a system with CBDC, then all bank accounts will be handled by the Fed, and they will then be in charge of who can get the loan and what not. The alarming thing is that the Fed can afford to lose money, they don't need to profit from it. While the bank has to lend money for productive purposes, the Fed does not have to, as they can lend it to anybody they desire with no immediate need to be paid back. It is then centrally controlled money supply, that creation, which then goes back to Marxism. It will also become a massive monopoly, similar to Orwell and Big Brother. They will be able to trace where you spend your money, what you spend it on, and where it is. This should not be an option. Money has been here long before its current form. It was made from real gold. It's only right that we are able to run with our money wherever we want without being tracked. This is where Bitcoin arrived, and some people were believing that it would be used for drag trades and such, but aren't dollars in the same situation? Are people really that stupid to drink Kool Aid from the Fed? As Rich Dad Poor Dad says, the poor dad was a brilliant academic man, but he was ultimately broke. He thought a PhD was all he needed to get wealthy. The Stanford Northwestern and the University of Chicago, he held on to that belief. And here's the rich dad, who laughs at the former, never stepping inside the school once. They believe they're above the law, superior to others. Jim Rogers said, "One thing history teaches you is that people don't learn from history. And this is why we like macro. It is repeating today with Russia, larger countries forming an alliance with them, then other countries supporting the West. It then creates two economies. Ukraine, for example, which are relatively small, yet highly essential and significant as they provide the majority of the food and energy globally. Ukraine has been responsible for the most countries throughout the world, from natural gas, potash, fertilizer, lumber, and so much more. In 2022, if we were to take a look at our economy, go macro, with the lens of understanding that the weeks we are living through may potentially go up to decades. This is all familiar territory. As Rogers said, history proves people don't learn from history, as there is the reoccurrence of the gap between rich and poor accelerating that is getting too wide already. Most often, people get poorer simply due to poor teachers. their parents are poor, or from poor upbringings. The mindset you should have is to look at your monthly expenses once you retire and think about how you will be able to cover those with your remaining money. How can you influence your cash flow to be enough for your expenses? Your savings should never be drained, and it may seem easy, but only few individuals realize that once sufficient cash flow has been created with their portfolio to pay for their monthly expenses, financial freedom is attained. The same thing can be said for the real estate area, especially back in the late 90s when everything was dot com and billion-dollar valuations were being achieved. While it is true that the internet was the future, it was not applicable for all, as 99% of them flunked, and the same can be said for crypto. Time will come that the likes of Bitcoin, Ethereum will become the pioneers of the future in the long run, but their purpose is honestly questionable if they will ever be transactional or simply be a digital reserve asset or store value in the context of Bitcoin. But one thing's for sure, the dot-com bubble burst in the 1990s will most probably repeat in the playing out of crypto. A group of friends in the United States in the 20-year-old age group have become so invested in crypto that it's gone to the point that it's all they have. They borrow money from people to get cash for lunch, but they do not necessarily have no money, since all of it is in crypto. Crypto billionaires or millionaires, but no cash. But the fact that it isn't in big names as Bitcoin, Ethereum, and more on lesser altcoins, they have this mindset that these have the potential to skyrocket similar to how Bitcoin and Ethereum have. The next superstar on social media, the billionaire that got rich off of crypto, but then they find their eventual doom, and it gives them the harsh lesson that their fellow young investors back then had to find out through time that it will not be different from when Bitcoin was at $65,000. Even if you're bullish in Bitcoin, you have to maintain a mindset on when to buy based on the panic and hysteria. Social media will influence you to get frantic, with crazy hysteria seen everywhere, and it can be easily noticed by people. There is a need to resist from being entranced in the commotion, to keep your emotions in check and remain positive, or you'll regret your decisions in the long run. Times are tough, and the world is in a crazy place, but with all volatility comes opportunity. Always stay focused on learning and developing discipline. Get educated, make a plan, and stay the course. If you found this informative, smash the like button. Please share it with a friend. Comment down below and let us know what would you like to have made finance simple next, and definitely subscribe so you don't miss new content. Keep your head up, ears open, and always search for knowledge. See you soon.